is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. We are recording this. It's Tuesday, May 13th. Consensus is about to kick off in Toronto. Andrew and I are going to be, I think, up to our elbows in events, attending different parts of the conference, and doing some speaking as well. So next week we'll be back with a full breakdown of Consensus Toronto, all the things we found interesting, any surprising news, and insight and analysis. But today I'm very excited about the conversation we're going to have because we have a very special guest, Vijay Chetty. So Vijay Chetty is the CEO of Eclipse Labs. Eclipse Labs is the team behind Ethereum's fastest and most scalable layer 2 network, and they've raised around $65 million in venture funding. Eclipse takes a kind of a novel approach, which touches on many of the themes that we've discussed on the show. They combine the Solana virtual machine for execution, settlement on Ethereum, data availability on Celestia, and risk zero for ZK fraud proofing. So Eclipse is designed basically for decentralized application developers who are building what we hope are category-leading DeFi, NFT gaming, and consumer apps, leveraging Ethereum's liquidity and network effects. So very much like an amalgamation of some of the best technologies from different ecosystems, playing to the strengths of those different technology stacks. Previously, Vijay was a venture partner at Tribe Capital, which is a $1.8 billion venture fund focused on AI, enterprise technology, as well as some crypto. And he's got a really interesting track record within crypto where he sort of interacted with a lot of different elements of the industry. Uniswap Labs, where he was head of business development. Before that, head of business development at dydx. And before that, the VP of head of business development at SharesPost, which was an early innovator in the world of tokenized RWAs and security tokens in particular. So Vijay's got a really interesting track record. I didn't go much further behind that. Maybe Vijay, to kick things off, you can tell us, how did you get into this space in the first place? What was that aha moment for you?
Yeah, I think for me, crypto was a kind of just a really interesting kind of intellectual topic early on, right? This was 2015. And I was working on Wall Street at the time at BlackRock, and had been doing that for a couple of years. And I think in the early days of crypto, you had the Bitcoin white paper, and that was about it, right? And Ripple followed shortly after that.
Yeah.
And for me, it was interesting because it was this combination of finance and markets, but also with the legal coordination aspect and then the technical piece of it. And we were kind of rolling up all three of these things into one substrate. So I just found it super fascinating. And to me, it was clear that crypto was going to develop kind of a capital markets ecosystem in the same way we saw in traditional finance. And so I took the jump in 2015 and joined Ripple in the early days there, and spent a few years there.
Yeah, you mentioned like at the outset, people read the Bitcoin white paper. This is before the word blockchain or even DeFi, NFT entered the vernacular. There was this one single thing, and I think Andrew, maybe a year after me, but that's where I first got interested in it as well. And the thinking was, Bitcoin is this really important innovation and monetary experiment, and it could potentially be massively successful. But the underlying technology of blockchain that basically allowed for trustless transactions online between anyone, anywhere in the world, was an innovation that could be iterated upon, right? And could develop all sorts of other potential use cases and applications. And if, crypto worked for, if blockchains could work for Bitcoin and other crypto native assets on those networks, could it work for other assets as well? So you went from BlackRock with this background in TradFi and then into Ripple. Tell us about the Ripple experience. And I do also want to talk about the SharesPost time that you spent as well, because they say there's nothing so powerful as an idea whose time has come again, because it feels like all of a sudden like RWAs and securities tokens are having like this big moment, but like people have been thinking about this topic for a very long time.
Yeah. So to touch on Ripple, I think it's interesting because I think back then things felt very tribal in a way, right? You sort of had the Bitcoiners, the Ripple and sort of XRP community, and then Ethereum was doing their sale. And so you started to have the development of Ethereum, and like you kind of had these like tribal camps. It felt very tribal at the time, and like I think these early camps like debated, how much do we kind of like cooperate versus kind of like compete or deposition versus each other. And I think fast forward to today, and there's sort of, the market's in like a different place now where people kind of accept the inevitability of some of these assets, particularly the top few. But then you sort of get this, I think because of the sheer number of projects out there now, it's almost like some degree of like depositioning or relative positioning is like necessary for survival and sustainability. So I think it's interesting, it's just those early debates feel kind of so small in hindsight. But it was an interesting time. I think at Ripple there was kind of like two strategies we had. One was very focused on enterprise bank adoption of the actual like blockchain or distributed ledger technology that Ripple was building, and then the other was more around building liquidity around the XRP ecosystem, right? The digital asset that's a part of Eclipse's. Ripple's stack, and those were kind of like largely independent. I think more recently, like they've converged a little bit, but there's still sort of, I think, this tension between institutions wanting to build kind of permissioned, somewhat siloed environments, and then like the more permissionless digital asset ecosystems that we see. But yeah, really interesting kind of early days of crypto, and I think just an exciting time. A lot of picks and shovels, businesses coming about. And then I think what was interesting about RWAs and security tokens, that kind of first iteration to me, was that you kind of had two things happening at the time, right? One was like this increasing pressure from the SEC to create a regulatory framework around digital assets, right? And largely like trending towards classifying most things as securities. And then you also had this kind of interest in application of blockchain or distributed ledger technology towards tokenizing assets and expanding access to kind of non-traditional assets in particular, right? And so these two I thought were like really interesting early trends, and like clearly like blockchain could be applied towards these, right? Obviously in kind of a more permissioned way. And a lot of the early work was happening on Ethereum around that. And so to me, there was this like very compelling idea of, okay, on one hand you have RWAs, and then on the other you can have sort of a framework for tokens, even utility tokens, to launch as securities initially, and then kind of like graduate as they progressively decentralize and season out from like securities laws into more of like a permissionless utility token, right? And I think Avalanche was one to like actually stick the landing on this, one of the rare few, right? And most others have kind of gone either like strictly RWAs or just strictly permissionless tokens. So anyway, I think it was a very interesting time, like that kind of first iteration for RWAs and security tokens. And I think it was just a little bit too early, right? The SEC was still a little bit too prohibitive in terms of regulation, and there wasn't quite the momentum. But I think this cycle, what we're seeing, clearly there's a lot of momentum behind it, right? And like largely owing to, I think, a more permissive regulatory environment. And what's interesting is like, it's not even the more esoteric assets that people are talking about yet, right? And I think that's really the big unlock for RWAs, is expanding access to a broader base through the blockchain to these like more esoteric assets like private credit or things that are not readily available. But instead, we're starting off with like very low hanging fruit, which is like money market funds, tokenized treasury funds, which I think is great, right? It's still a proof of concept and a great first step, and low risk, right? So everybody can make that jump. So it's been great to see that.
I know Andrew wants to jump in, but I want to just make one comment. You mentioned how in the early days there were these different protocols that had launched recently, and there was some tribalism between those groups. I would posit that hasn't changed all that much, that there are still very much different like camps within crypto. And I've always said like everyone's goal should be on growing the pie rather than fighting over this tiny little piece that we've just started, because ultimately this technology is not widely deployed in finance or in any industry. and that should be the objective versus like trying to like debate the merits of one over the other. But that's just kind of my opinion. Andrew, did you want to jump in?
Yeah, I just really want to talk about about Eclipse. I think, like, to me, so I believe we had Andy from Eclipse on a couple of months ago, pre mainnet launch, and you guys had a really successful launch, particularly with the launch of your TurboTap game. I believe it's called Tapmas, and we saw like insane numbers of transactions on Eclipse. And I remember over like the last couple of months seeing a ton of stuff on crypto Twitter, like just these like crazy charts up and to the right. So yeah, just kind of was just kind of curious, like that was a very unique sort of go to market for an L2 to actually create your own sort of like, your own application, and like purely targeted for, what an application that inherently will stress test the network a ton. So yeah, just kind of curious if you want to just talk a little bit about like the launch of Eclipse, like how you guys thought about go to market, and just kind of looking back on it, how you think it went.
Yeah, it's definitely been an exciting kind of past 6 months or so. We launched mainnet around October of 24. So it's been going for about close to, just north of 6 months now. And a lot of our early thinking was that, for Eclipse, the North Star is to build the most performant rollup on Ethereum, right? So that includes being the fastest and the cheapest, and the lowest latency, and basically providing a place where you can build applications at Web2 scale or even beyond in a Web3 environment, right? So you get the best of both worlds. And we kind of approach it from like a modular perspective, right? So taking the Solana VM as kind of the anchor at the execution level, so you get the speed and performance of Solana, and then combining that with the security, liquidity, and network effects of Ethereum as the settlement layer. So you kind of get access to that user base and asset base on Ethereum. And so we wanted something that could be a great early proof point to really showcase that, right? And I think part of the reason why we've like moved so aggressively into the application part of the stack is that I think if you zoom out and look at the landscape, right, there's a lot of infrastructure out there right now. I think this past few years like just came with an explosion of infrastructure, right? And it even continues a little bit. I think it's a little more slower paced now, right? But the infrastructure and its capabilities like far surpassed what was happening at the application layer at the time. And so we wanted to do something that like pushed the boundaries and like showcase like an application that actually showcased what was possible. And so that kind of brought us to this idea of like a tapping game as a way to effectively like battle test the throughput of the network in a production environment, right? Where every tap is an on-chain transaction. And, I think it really served that purpose in terms of highlighting what was possible on Eclipse and only on Eclipse, right? Because right now in Ethereum, there's no other rollup that comes close in production to even being able to support something like that. And it also kind of created a very interesting like user experience and kind of gameplay and community dynamic that really like drove a lot of attention and interest in Eclipse as well, more broadly. And this was also kind of like the backbone through which we rolled out early quests and user user quests on Eclipse as well. So it was this fully integrated kind of way for users to see what was on Eclipse, to interact with it, to become regular users beyond just the tapping game. So TurboTap was really, I think a success in that sense, and highlighted what was possible on Eclipse. And that kind of approach is one that we continue to focus on, right? Which is helping to incubate some internal and others largely external as well, but continue to incubate with founders like to build these apps that highlight what's possible on Eclipse, right? Like what can people build when you're unconstrained with throughput? Eclipse hit a peak transactions per second of 9,000 plus sustained transactions per second of 3,000 plus, which is an order of magnitude higher than what's been realized in production to date. And then we're continuing to push that throughput with our research roadmap and the performance thesis that we recently published to even higher orders of magnitude, right? So 1 million plus transactions per second. So when you don't have to worry about throughput caps, and when the cost per transaction is so low, what can app developers build? And that's like really what we want to push in a very active way to differentiate and show developers what is possible.
Yeah, I think it's pretty crazy. I think you guys hit 500,000 users within 3 months of launching. That actually might even be understating it. And just the amount of transactions was just completely insane. Like I think even today, you guys are still doing like 4 or 5 million transactions a day. Which is
and that's after we've taken the snapshot as well, right? In advance of the eventual Eclipse token.
Yeah, exactly. Like that's just organic usage, which is wild. It's just it's pretty crazy. I guess how do you guys think about? So I guess like one of the things I've been thinking a lot about with Eclipse is Solana. Solana's going after the hyper scalable sort of model. I guess you can think of it sort of same way as you guys, but the downside of that approach is that like the token, the network is relatively unprofitable, I believe, because like inherently you're trying to give users incredibly low fees, and so that adds costs and then and also hurts revenue. And I guess one of the arguments though is like because Solana is like an L1, there's theoretically there's like a monetary asset value accrual argument, which is maybe a harder argument to make for Eclipse as like a more pure play L2. So I'm just kind of curious, like how do you think about? Obviously, it's really early days. Growth is more important, but I'm just kind of curious, how do you think about value accrual long term as like a ultra scalable L2?
Yeah, it's a great question and definitely one that we think about a lot, right? And I think the anchor is really first we want to drive usage and adoption of the network, right? And I think considerations like that can follow after that, right? Once we've kind of like hit this escape velocity and are seeing just a ton of organic traction and growth. But as an early proof point, right? So in terms of transactions to date, the network has had north of approaching like 23 billion transactions to date. And that's all been at a total cost of just north of 2,200 ETH. So there's a pretty meaningful amount of revenue that's still being generated, right? And of course, I think it's a whole separate discussion in terms of like valuations in the space for layer twos, right? But like zooming out, like if we're kind of indexing to the current valuation multiples and the way that the market thinks about tokens, like it's not something that we see as like something to kind of like worry about or as a consideration like near term, but definitely like longer term. Initially, like the Eclipse token would be a governance token, right? But ultimately, over time, we've been quite public about returning kind of all network value to a combination of apps on Eclipse as well as the token holders, right? So there's this idea of MEV redistribution that we talked about, where apps will accrue the portion of network value that they create. So it's basically, if you look at app developers and the decisions they've been making, the interest in app chains has largely been for two reasons, right? One is seeking unconstrained performance, and the second is seeking to capture the economics that they create, right? So this happened with dydx's move to dydx chain. This happened with Uniswap's move to Unichain, and so on and so forth, right? And so I think if you can solve these two considerations for developers, deploying to a general purpose layer 2 that gives them these two benefits of unconstrained performance and MEV or value redistribution, it makes a ton of sense to deploy to a general purpose kind of shared liquidity environment. And that's really the argument that and the case that Eclipse is making to those types of developers who are considering that. And so ultimately, like going back to kind of the original question, like we want to return all this value to network stakeholders, right? So a combination of app developers, token holders, and in terms of like the cost basis for Eclipse, right? Eclipse is posting blocks of data to Celestia. So the cost basis for that is extremely low as well. And based on Celestia's roadmap and just their ability to support kind of expanded data posting, we've worked through the economics, and it's not really a consideration or kind of a concern for us in terms of being able to be kind of net profitable at the network level, as long as we continue to focus on that network growth and adoption as we've seen to date, right? So I think if we continue on that trajectory, the kind of network profitability is less of a concern, but we are thinking a lot long term about what other kinds of token utilities, such as staking, and kind of other aspects that we can bring into the picture as well, along with certain enshrined protocols that may also bring revenue back to token holders. So there's a variety of things that we're thinking about long term, but I think for right now, on kind of the immediate foreseeable horizon, it's very much about just driving network growth and continuing to be on that trajectory.
Yeah, I think that's, sorry, Alex, I know you want to jump in too, but that's
Well, no, I mean, I
really
just want to ask the dumb guy question, which is like, this is a layer 2 network. Eventually there's going to be revenue. That revenue can be paid to stakers. So like token holders will be like economic participants in the network where like they're receiving inflation yield, but also like revenue yield, kind of like like a Solana layer 1. Is that basically it?
Yeah, exactly.
Yeah. Okay.
Cool. Yeah, it's interesting. I didn't. That's one thing I didn't realize. I guess think about too much. I guess also is if you guys are using Celestia for your GA, and Celestia just keeps driving down their costs, that inherently makes L2s more and more profitable. Which I didn't even like L2s that rely on Celestia.
Yeah, exactly.
Which is really interesting. I guess sort of a corollary to this, not to get off Eclipse too much, but how do you think about the fact that like the leading L2s, like you guys, are increasingly using Celestia for DA, and like where does that kind of leave Ethereum long term? As an asset with this like roll up future, when increasingly a lot of the L2s, are maybe just at least using Celestia for DA and not using Ethereum, and I guess passing less and less value back to Ethereum. So I guess I'm just kind of curious, like how you think about, because obviously like one of the big value adds for using Eclipse over Solana, as like personally me as like an app developer, is the fact that you guys are obviously so tied into like the Ethereum sort of ecosystem and the sort of security aspect. So yeah, just kind of curious how you think about that.
Yeah, it's definitely an interesting question, and we've kind of talked a lot with the Ethereum Foundation and shared feedback around this, but I think there's a certain I'd say at minimum it's Eclipse enables this idea of ETH as money, right? And like the moneyness of ETH, because on Eclipse you use ETH as the gas token, and Eclipse enables new apps to be offered to these Ethereum users and asset holders. And of course, like ETH tends to be the largest holding for a lot of them, along with other ERC20s, right? And so it's kind of about opening up a new app or kind of transaction space for these holders. And so I think at a minimum, it enables this idea of ETH as money, right? And, it's interesting. I think BTC is like kind of store of value, right? If you look at a lot of BTC holders, they tend to have their assets kind of like locked up in cold wallets and not really a ton of interest in doing stuff or, unlocking like the collateral value in DeFi from BTC holders, right? But I think if you look at ETH holders, that's very much the case, right? And there's this idea of like ETH is actual like money. So I think there's an interesting opportunity there to really like build and enable that story. And then beyond that, right, in terms of Ethereum as infrastructure, there's other teams like still working on the EVM as well. I think there's, obviously a bit of a tension now between like this world of like rollups being delegated, the kind of the execution and transaction power of Ethereum, and then also this idea of like based rollups, right? That there's kind of a camp that's focused on. And so I think it's healthy to like continue to see development in both of those. And so we'll kind of see how things develop over the next few years. But at a minimum, there's just a huge amount of asset value on Ethereum that's like not been doing too much, I think, in recent years, like post DeFi summer. And so kind of bringing like a new set of apps or an order managed at higher throughput and being able to like really do interesting things with those assets, I think is a big opportunity as kind of like the first step.
Yeah.
So that's how we think about it. And, I think an interesting stat here is Orca, which is kind of a blue chip app on Solana that's been around for a while and done a really great job. Like they expanded to Eclipse shortly after Eclipse mainnet launch. And if you look at the user activity on Orca, 70% of it is coming from Ethereum users. So it's an interesting story in terms of like both for Solana apps in terms of expanding over to Eclipse and growing their audience, and also for Ethereum users in terms of tapping into new and interesting apps as well.
Yeah. And sorry, one other kind of follow up to that as well. Like, how do you guys think about developer go to market in the context of, are you guys more and more focused on kind of like bringing Solana app developers and Solana users over to Eclipse and like kind of into Ethereum? Or are you guys kind of thinking more about bringing, like you said, a lot of that like latent users on Ethereum onto Eclipse and like actually using, essentially, I guess that's really my question is, are you guys more focused on bringing the Ethereum community over or bringing the Solana community over? Like what's kind of, I guess, do you guys have like a target in mind, or is it kind of just, target everyone, I guess?
Yeah, it's definitely a bit of that kind of all audiences, right? But I think longer term, it's more about that Ethereum user and asset base, right? And I think that's like the harder nut to crack. Short term, like we've seen a lot of interest from existing Solana apps and expanding to Eclipse, right? Because it's effectively an expansion into Ethereum users and assets while being able to leverage the same code base and app framework that they've had for their Solana deployment. So it's a very kind of natural way for them to expand their audience. And so what we see is that the more established Solana apps who've been around for a while and really cemented themselves on Solana, they look at expanding onto Eclipse, while the younger apps who maybe have just launched their token on Solana, the Jupiters of the world, like they tend to be more focused on that core Solana deployment until they kind of like hit that saturation point and want to start expanding from there. So I'd say that's kind of the distinction. We think it is an interesting opportunity to enable, call it like Solana expansion, right? That's definitely a part of the Eclipse thesis, but I'd say it's like more the short to medium term, and the bigger and kind of long-term opportunity that we see is in attracting and converting all these Ethereum and ETH users and asset holders and bringing them onto Eclipse so that they can access all these new apps and sort of throughput on a level that they have never seen before to date on Ethereum, right? So that's definitely the bigger opportunity. And, like we really want like net new Eclipse native apps, right? And that's where we're spending a lot of our focus now, right? More TurboTaps or things that only exist on Eclipse and take advantage of what's only possible on Eclipse. I think if we keep doing a good job of that, then we can really attract those Ethereum users.
Yeah, so there's Solana apps that, want to access Ethereum users, developers. And then there's, Ethereum users that want to access Solana apps.
Exactly.
And then there's people building on Eclipse standalone for the benefits that come from both. One other question then, related to that, which is, it's a Solana virtual machine. Could you do it for other non-EVM compatible blockchains? Like, could you do like Sui or Aptos or Monad, like any of these alt layer ones?
Yeah, like a Move VM
with Ethereum, like the everything store EVM, like, basically virtual machine. I'm just wondering, because like one of the reason I asked the question, I mean, you can probably guess, but all this siloing of different liquidity and apps and users, seems kind of bizarre when we're talking about, networks that are supposed to be composable and assets that are supposed to be fungible, and it just seems like at odds with the ethos. So I'm wondering if you can do that for other stuff too.
Yeah, it's definitely possible is the short answer. I think it's something we've talked a lot about too, right? The idea of like maybe there could be an SVM roll up for BTC, and at the end of the day, like these are all kind of separate. Yeah, exactly. And there's like huge asset value there that's not doing much, right? But then I think there's a question of like, do BTC holders like philosophically want to do things with their assets in the first place? And I think with ETH, that's very much the case, right? So that was a very kind of high conviction first bet for us. We've definitely talked about this idea. I think expansion of the SVM to other chains is definitely interesting long term. I think it is effectively like a separate network or kind of user base to build out. So in that sense, if we were to do it, it would be kind of a wholly separate thing to grow. And there's of course like synergies or kind of efficiencies in terms of like being able to deploy to multiple of these. But in terms of like the wallet experience and the onboarding and user experience, it would effectively be separate chains. So that's just something I think for us as a team, it's like, what's the right order of expansion there? And just given kind of the characteristics of Ethereum and Solana, like the North Star for us is like combining that speed and performance of Solana with liquidity and network effects of Ethereum. And that was, if we had to pick one, that's like the highest conviction bet. So, but maybe longer term, who knows? There could definitely be expansion of that thesis.
So one of the things we've talked a lot about on this pod. So I guess just quick context. Alex and I are both big ETH bulls.
Yeah,
and it's been a painful 12 months for ETH bulls. And I think like the big issue with Ethereum, I think personally, like what's hurt its performance was it sort of was seen as being crushed into the middle in the sense that Bitcoin is like the pure play store of value, and Solana is like the pure play development platform, and ETH was just again seen by the market as like this weird, users and flows are leaving to Solana, and institutional capital is going into Bitcoin. So what's the point of ETH? I think personally, it's not overly warranted, and I have a thesis that I think maybe not this cycle, but next cycle, Solana will be in a sort of similar position in the sense that Ethereum is going to have all these incredibly high performant L2s that are going to be where that almost personally I think will have even higher sort of scalability and TPS than Solana can, just by virtue of a single sequencer and just like the trade-offs you can make on the L2 space, and Ethereum will be kind of like the programmable asset, and Solana will be sort of in the position that Ethereum was this cycle, where it's kind of squeezed in the middle. I guess what do you sort of, A, is that the right way to think about it? But also B, can you just talk a little bit about some of these trade-offs that L2s can kind of make to be way faster, potentially even faster and more scalable than Solana? I guess, is that something that you guys sort of think about as like a competitive advantage, or are you guys more kind of thinking about, we're just looking to sort of match Solana and just bring the SVM over to Ethereum?
Yeah, and I'll definitely start with that because I think it informs like the broader thesis. But yeah, we very much lean into what Eclipse can uniquely do as a layer 2, right? Even leveraging the SVM. And so this gets to the core of the Eclipse performance thesis that we published recently, which is essentially a roadmap leveraging hardware, software co-design, including hardware like FPGAs, GPUs, smart NICs, like hardware that's seen a ton of adoption in the AI and kind of the LLM world, but hasn't really seen widespread use in crypto. So leveraging that to drive massive performance improvements, and then smart scheduling and dynamic scheduling to basically ensure that multiple hotspots can coexist simultaneously, right? And so this roadmap I'm describing pairs with this idea of eventually a single sequencer, right? And a single rotating sequencer that can really tap into the performance improvements that come from hardware. And so that kind of integrated vision is one that only really a layer 2 can pursue, right? Because as a layer 2 on Ethereum, we largely inherit the shared security of Ethereum, whereas Solana as a layer 1 has a trade-off to make between driving performance improvements and then decentralization and network security as a layer 1, right? And so I think Solana's done a great job of balancing that, right? And really a lot of their growth this kind of current cycle is because they've been able to iteratively do a better job than Ethereum of driving those performance improvements, but continuing to have a network with strong shared security. Obviously, I'm sure there's ETH heads who might debate that, but it's kind of like a practical builder-friendly solution, and so they've been able to kind of like maintain that vision of a monolithic layer 1, right? But even Solana has kind of seen some green shoots of layer 2s, and I think those are largely proofs of concept at this stage. But I think going back to Ethereum, like you can really do things as a layer 2 that you couldn't dream of as a layer 1, right? And so Eclipse we very much see as like the end result of accelerating that thesis, right? Which is we're making practical builder-friendly trade-offs. And I think what's more important than, say, like a decentralized sequencer set, as has been emphasized like the past few years, is more of the ability to verify, right? And verification and transparency of how that sequencer set is maintained. And I think if you can deliver that, then actually requiring a fully decentralized sequencer set is not something that users hold above all else, right? I think it's probably like far lower down the priority stack as well. And that's also proven out, I think, in various other ways over the past few years, which is, there's users and developers want practicality, right? They want the ability to build things and use things easily, and they're willing to trade off on like pure decentralization ideals. And so what's that balance that kind of holds both in balance, right? Of practicality and usefulness with decentralization. And I think what's more important than like pure decentralization is that verification or ability to, not just have to trust, but you can verify things, right? And if there's that verification, then users and developers get comfortable. So that's kind of the thesis that we're building on, which is you can have a single rotating sequencer, provide transparency and verifiability around that. And then you open up a whole new design space of leveraging these massive hardware-based improvements, hardware, software, co-design, dynamic scheduling, and doing all these things that only a layer 2 can to really tap into the potential of all that. So that's a big part of our thesis. And, I think fast forwarding a few years, I think, I agree with the thesis that you mentioned that this development of kind of extremely high performant layer 2s will open up a lot of design space and interest and activity in Ethereum again. And then maybe later, it's Solana's turn to respond of, will Solana leverage layer 2s, or how will they kind of like manage and continue to drive towards that performance and practicality that they've been known for this cycle? So, I think it's a give and take, right? And right now, I think as an industry, we're at a point where throughput is definitely, we've opened up, orders of magnitude higher throughput, and now it's time to build apps that can take advantage of that, right? And then eventually at some point we'll hit the upper boundary, and then it's time for kind of the next wave of unlock and throughput there.
Yeah. Wow, it's really interesting. This has been for me, really educational and information dense, but in a good way. I think Andrew's a little more in the weeds on some of these things than I am. But to me, I basically love the idea of finding ways to build bridges between different ecosystems to make both more performant and to make the experience for users and developers better. I like the idea of combining the best of different things into something new. And I also like the idea of like this kind of being an open-ended thing where, to your point about Bitcoin and some of these other ecosystems, like this could be a template for how to integrate some of these different platforms more closely. And then obviously, like in the end, it may just be that Eclipse is the thing where people build. Why do it on any single thing and when this one maybe combines all these different attributes. So that's basically what I gathered from it. Andrew, I don't know if you have any sort of closing thoughts.
Yeah, I guess one quick question. Are there any particular apps that you think are going to be that are going to leverage this insane scalability that, you guys and sort of new L2s are building that no one's really thinking about right now? I guess, what are the, any sort of or at least areas within the space that you think are kind of primed for huge growth now that we have this big infrastructure unlock?
Yeah, so I think there's two short term that we're very actively working on and have some launches coming up, and then I'll just touch on the longer term opportunities. So for Eclipse in particular, I think we see a big design space around consumer, right, and specifically financialized consumer. We've seen a lot of early proof points around this with Friendtech and Yapster. TurboTap in a way was kind of tapping into this as well, and I think this is an area that has potential for mass adoption, right, and breaking through into a larger audience. And you can have these types of user behaviors where every time a user takes an action, it's an on-chain transaction, right? And you create these gamified dynamics around it. And so that's something that we're very bullish on and incubating a couple of projects now. And then the other space, of course, is DeFi, right? And I think DeFi is always the foundational kind of floor for any ecosystem. And so Orca and Astral are two of the flagship apps I'd highlight right now. Astral is Eclipse native, Orca deployed from Solana. And those have seen a lot of interest and activity in terms of ETH, Sol, TIA, the Celestia asset, as well as the liquid restaking index tokens that exist on Eclipse. And this is a big angle where, of course, there's been a ton of LRT activity on ETH emerging on Sol. And so we've created these index tokens. The ETH one is live now, where users can effectively get ETF-like exposure to the LRT space by depositing any given LRT. So it's effectively like an index ETF type structure. And we've seen a lot of interest in that from institutions. And then they take those assets and effectively participate in LRT-focused DeFi on Eclipse. So that's kind of a big emerging area that we've seen a lot of transactions and activity in on the DeFi side. But in particular, I'm excited for a central limit order book product that we have coming up over the coming months, which basically is going to tap into the throughput and the low latency that Eclipse offers, right? And I think if you look at order book products in the past, they've always either been constrained by the scalability of Ethereum. In the case of Solana, there have been multiple who've coexisted on the L1, but Ethereum has rarely seen an order book kind of live on the L1 for a long time, right? They usually graduate to an app-specific chain or roll-up due to the constraints. And I think being able to bring order books back on chain and tap into what's possible with high throughput and low latency is an exciting opportunity, right? And I think perpetuals continue to be a product of huge interest in crypto as Hyperliquid has proven out. So DeFi is definitely the second area I'm bullish on near term. And then longer term, in terms of what Eclipse is unlocking with our performance roadmap and getting to 1 million plus transactions per second, AI, DePIN, or decentralized physical infrastructure, and gaming are a few of the areas that we're bullish on. But I think there's still more development and work and iteration to happen in those areas. So we're kind of planting some longer term bets there.
Yeah, really interesting. Vijay, thank you so much. We agree on all of those things. DePIN, decentralized AI, and DeFi are the three areas that we've spent a lot of time on the show talking about. And we know there's product market fit around DeFi. Obviously, the move this year with Solana meme coins showed that the AI, the vibes are there, but I think there's a lot of implementation that needs to happen. And then DePIN, that's something that we see a lot of value in too. So good luck with all those things. Hopefully the developers come and build on your platform. It sounds like they already are. Andrew, thanks for your great questions. Vijay, thank you so much for joining us. That's it for this week's episode of DeFi Decoded. Make sure to give us a follow, like the show, and share it with friends wherever you get your podcast. Until next time, see you later.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.